And welcome to the ISTAT Learning Lab. Today we're going to talk about aircraft storage and utilization patterns during this time of crisis. And to do that, we have Rob Morris in the studio in London. Rob is the head of global consultancy at Ascend by Cirium. And he's there responsible for evaluations, appraisals, and market advisory for commercial aviation customers, airlines, finance companies, MROs, and other companies in this aviation service sector. Before 2012, when Rob joined Ascend, he was Vice President Marketing and Analysis of BAE Systems Asset Management. And before that, he was on the aerospace team of the UK Department of Trade and Industry. And he was managing market analysis and forecasting for UK's investments in various aerospace programs. Rob started his career in aviation in 1990 as a marketing executive at British Aerospace, where he was working on the regional aircraft side there. Before I hand over to Rob, I just want to mention that you can pose questions in writing during this session by clicking the little Q&A button at the bottom of your screen. Write in your questions, and to the extent we have time after Rob's presentation, we will go over those questions. I also wanted to mention that on November 17th, we have Doug Walker from Seabury to talk about airline restructuring. And we're going to have a continuing program after that. Details will be announced on the istat.org website shortly. And with that, I want to hand over to Rob Morris.
Thank you, Niels. Good afternoon, everyone from very rainy Hertfordshire in the UK. Good morning to those of you in North America. Good evening to those of you in Asia. And for anyone listening on demand, simply hello. Thank you, Niels, for the introduction, and thank you to ISTAT for the opportunity to present over the next hour or so, when I'm going to talk about or use empirical data to talk about aircraft utilization patterns and aircraft storage trends, retirements, etc., through the pandemic. Before I do so, if I can just make one point. So Aviation Airline Economics have their Aviation 100 awards open for 2020. At Ascend by Cirium as appraisers, we really value the endorsement of the market. So if you're able to vote for us as your appraiser of the year, please do so. In fact, when you receive these slides, there's a link behind this slide which you can click through. So there's the quick advertorial. As I say, over the next hour or so, I'm going to talk through a lot of data which covers the lovely title I've been given: furlough, part-time, redundancy, or doomed, plus the outlook. Before I start, I want to cover a little bit about our data and the definitions. So all of the fleet data that I'm going to talk about in this presentation comes from Cirium's fleets database. Now, my analysis largely focused on passenger single and twin aisle jets. Of course, we also include regional jets, turboprops, business jets, etc. in that database. But I wanted to focus on the two major sectors because the analysis becomes somewhat more complex if I go into those other sectors as well. How do we define that data? So our stored definition, which I'm going to talk a lot about over the next hour or so, has changed several times in 2020. Prior to 2020, our definition of an aircraft in store was an aircraft which had had 30 continuous days of inactivity. And of course, now that we have all of our flight status tracking data, we can actually track that inactivity through that detail. Up to early February, that endured. But in early February, once the pandemic had hit in China, aircraft were being stored much more quickly. We changed to 7 days. And we ran that right through the end of April virtually when we started to see the pandemic reach the bottom, the hibernation phase for airlines end, and aircraft start to return to service. So from 27th of April, we changed to 14 days of continuous inactivity. And from 1st of June, we reverted to 30 days. I'll refer to that throughout the presentation at various points because you will see how it impacts on the data. I will also make the point that if our research team, we have a fairly large research team, more than 30 researchers, largely based in our Heathrow office in London, but also some other places. If they know aircraft will be parked sooner, then they will immediately park them. Further definitions: retirement is an aircraft which is dismantled, parted out, finally taken to pieces for part out or scrap. And then we have other databases as well, data sources. I'm going to use utilization data coming from our flight status data. That includes scheduled and non-scheduled flights by tail number on a daily basis. We cannot differentiate the purpose of the flight. So I'm just going to talk about the role of the aircraft when I talk about that. And then finally, I'm going to use schedules data. So that's the data and the definitions. And of course, just some context. Why are we here? Why are we speaking about this today? Well, of course, as we know, the pandemic has fundamentally impacted the demand side of our industry. And here's the reaction in supply terms. In supply terms, our schedule says that capacity year to date, this is daily change on a cumulative basis versus last year, is down more than 50%. IATA actually report capacity further down because our schedule slightly over reports because airlines are tactically cancelling flights on a day-to-day basis, as well as adjusting schedule in the near term. So the lines, the diamonds that IATA indicate it's even further down. And the traffic, the demand to the capacity supply is even further down, 64% year to date at the end of August over 2019, with all regions being at least 60% down. When one thinks about the two prior downturns in our industry, 2001 to 3, 2008 to 10, over those 3-year periods, we saw only a 2% decline in global capacity in aggregate terms. The order of magnitude of this is so much greater. That's some context about why we're speaking about this today. So, first of all, and I'm going to continue to use employment metaphors throughout this presentation, furlough. The fleet on furlough, the fleet in store, increased to more than 14,400 aircraft at the peak of the crisis. That was around 2/3 of the installed fleet of 20,000 commercial passenger single and twin aisle jets. It of course has fallen today. It's fallen to around 6,700 today, still around 30% or so. And there's a clear dynamic between single aisle and twin aisle. Single aisle, which I could perhaps argue is synonymous with domestic markets largely and short medium haul markets. Around 27% of the fleet is still in store today. Twin aisle, synonymous with long haul international markets largely, more than 40% still in store today. The pace at which that fleet in store or the fleet on furlough has been returning to service, has been returning to employment, is actually slowing. That's to some extent being driven by our 30-day inactivity rule, which shows at the right-hand end of this, and this chart is effectively showing on a weekly basis the number of aircraft classified in service now, single and twin aisle, single aisle, the teal color, twin aisle, the yellow color. We can see that we've got here I've drawn effectively a dotted line on here because with the 4-week lag induced, we're seeing retrospectively aircraft in this week, next week will be put into store. A couple hundred aircraft a week. So the outlook, I think, is for more than 6,500 or so aircraft to remain furloughed at the end of the year, and it may well become significantly more as we see airlines in the Northern Hemisphere heading into their winter with typical seasonality anyway, with more pandemic cases, increasing restrictions on travel, driving airlines to perhaps reduce their schedule even further over what we've seen already. Of course, furlough is not a new phenomenon. As we entered this year, there were around 1,900 commercial jets in store. Of course, that was inflated by around 380 MAXs, which were in store in the near term here. But of course, if those MAXs had been in service, it's quite likely, given the balance of supply and demand, that there may have been 380 other 737s in store instead. Of course, the age profile, because this is effectively showing the build year versus the number of aircraft in store and the period they've been in store for, we may have seen more midlife or older 737-800s in store. But aside from those MAXs, at the start of the year, there were relatively few young single aisles in store. How has that changed today? If I look at the portfolio of aircraft in store today, and this is just single aisle aircraft on this chart, I'm going to go and do twin aisles shortly after a couple more slides. Again, by build year, we can see that the relationship, and this dotted line here, is showing the number of aircraft of that build year that are in store, the ratio. So effectively, for 2015, we have 20% of aircraft, single aisle aircraft built in that year, presently in store. That number being, I can't see the left-hand axis, so that number being around 200 or so aircraft. There's an almost perfect straight line relationship to some extent between build year and the percentage of aircraft in store. And unsurprisingly, as aircraft get older, there are more of them in store. If I look at the same data, and forgive me, I've just changed the axis on the left-hand axis there to make these bars larger. So that was 800 before, it's 400 now, but it's the same data. And look at it by ownership. We can see some pretty clear trends here. Operating lessors manage around 55% of the stored single-aisle aircraft. Operating lessors manage around 52% of all single-aisle passenger aircraft globally. So they're actually managing slightly more of the stored aircraft. In other words, lease aircraft are in store more than owned aircraft with airlines. That is, there's some clear logic to that, which I'll describe later. And it's interesting when one looks at the age breakdown of the lessor stored aircraft. These numbers here are the lessor stored aircraft, both on lease and off lease. And by the way, I call idle off lease aircraft. So operating lessors have around 300 single aisle aircraft presently idle, off lease, genuinely available with no future known transaction. But they have a number of aircraft on lease. They have around 67% of the inventory of 10-year and younger aircraft, 1,123 aircraft. They have around 63% of the 10 to 20-year-old aircraft. They have a much smaller percentage of the oldest aircraft. So it's a reality that lessors manage more of the stored aircraft and they manage more of the younger stored aircraft. That could potentially be an issue when one thinks about re-employment of these aircraft. That's who owns the aircraft. Which aircraft are they? So effectively on here, I've just plotted the number of aircraft that were in store by aircraft type, major variant, as of middle April, when we had the 60% of the fleet stored, and as of 20th of October, the data I prepared last week. The average is 27% for single aisles as of that date. And then these are ordered, by the way, by the size of the fleet in service at the start of the year. So there were most 737-800s, then A320s of single aisle, etc. You can see that the modern aircraft, so I pick out A320neo, have returned to service relatively more. A321neo, of course, MAX can't have returned to service. So if you're a 737 operator, you have to have returned 800s. But A320, relatively more still in store than the fleet average, A320ceo. And then some specific types, A220, 300, very low numbers now in store. So unsurprisingly, airlines have returned their more modern aircraft, single aisle aircraft to service more quickly. The same for twin aisles, but twin aisles will make two really important points here. The number of aircraft in store are greater as a percentage of the fleet. And if you look at the percentage by vintage of aircraft in store, it's also higher. So remembering for 2015 single aisles, we had about 20% of aircraft that were delivered in store. For 2015 twin aisles, it's around 30%. Much higher numbers of younger vintages of these aircraft in store right now. Lessors manage 38% of the twin aisle fleet today. They also manage 38% of the stored twin aisle fleet. So they have their relative share. But the same as when I talked about single aisles in vintage terms applies. They have a higher percentage of the younger inventory in their stored fleets than airlines do of their stored fleets. Airlines, I could argue, are returning their own aircraft to service first rather than returning leased aircraft to service. Which of the aircraft in the wide body market, the twin aisle market, have been returned to service? The same kind of data again, sorted by the largest number of aircraft in service. Sorry, this should say 300 ER here. And you can see that the 787-9, even the 787-8, the A350-900, the 787-10, which actually had a much lower share of its fleet ever in store, have returned to service more quickly. Perhaps the one that bucks the trend, if I talk about next generation versus current generation, is the 777-300ER. And here comes a point about aircraft usage. So these aircraft are aircraft that are classified as passenger aircraft in our fleet's database. But the 777-300ER has an excellent cargo capacity by virtue of its very large belly hold. And of course, airlines which are not able to fly international passenger networks right now are still flying international networks to provide the belly hold and sometimes the main deck capacity of a passenger aircraft as so-called freighters, passenger freighters. So some of these aircraft that have been returned to service here may well be being utilized largely for their cargo capacity right now, as much as they are for their passenger capacity. I haven't covered any analysis of main deck freighters in this deck, but if I were to talk about main deck freighters, I would be showing you that a significantly higher percentage of main deck freighters are in service now. The fleet of main deck freighters in service today is 20% higher than it were at the start of the year, as those main deck freighters have come back in to backfill the 50% of cargo capacity that was historically being offered by passenger wide bodies. If I think about why the airlines are doing this, why are airlines parking more lessor aircraft, why are airlines effectively operating certain types of aircraft, they have several considerations to make when deciding upon the operate versus furlough, employ versus furlough. I haven't gone into a lot of detail here, but just a set of quick bullet points. The network demand environment, of course, is the first key point. Does the payload range of the aircraft meet the route demand dynamic? In the event that the payload range does meet the route demand dynamic, I would argue airlines will probably operate the smallest aircraft that can do that, because by doing so, they minimize their trip cost, even if their unit cost is disrupted. They want to minimize their variable cash operating cost. And here's a really important point, because we've heard this said many times. Fuel price is low, therefore airlines will use older aircraft, won't they? Well, even at the price that I looked at last week, which is $1.06 per US gallon, and even at today's low utilization, which is about 7 hours per day for a single aisle aircraft on average, a next generation single aisle aircraft, an A320 Neo, let's say, burning 15% less fuel than a current generation aircraft, could be saving $900 per day. $900 per day. You might say, big deal. An airline might say, well, yeah, it is a big deal. But if you do the math, it becomes very pressing very quickly. I simply looked at EasyJet. EasyJet currently have 37 A320 Neos and 14 A321 Neos in their fleet, and all are in service. So those 50 aircraft could be saving each $900 a day. That's $45,000 per day suddenly. Multiply that by a 30-day month, and suddenly you've got a $1.3 to $1.4 million saving per month. That's why we're seeing the A320 Neo and the A321 Neo as preferred returns to service than COs. And I would argue also, once the MAX returns to service, as looks potentially likely next month, we'll see the same substitution effect once passengers become comfortable with the aircraft as we're seeing with the A320 Neo. And suddenly we might see a lot of 737-800s being replaced in service. In addition, to minimize variable cash operating costs, you can avoid maintenance and end of lease compensation spend wherever possible. Well, maintenance is an important one. Your A320 Neo is probably a relatively new aircraft. You're in a maintenance honeymoon period. Thus your spend on that aircraft is going to be lower than a CO, which could be heading perhaps for some kind of maintenance event. An end of lease compensation spend itself as well, or maintenance accrual as well in the next one, avoiding accruing maintenance reserve obligations. An aircraft on lease could easily be accruing in excess of $100,000 a month maintenance reserve obligation. Whether that's end of lease compensation or reserve itself paid out as cash, those are two things which airlines would prefer to avoid spending right now. So better to park your leased aircraft and fly your owned aircraft than fly your leased aircraft. And then finally, minimizing ownership costs themselves. Of course, this is an important point because the Neo would probably cost more than the CO, depending upon the financing structure. But certainly leases expiring with monthly fixed rate represent increased unit cost in today's utilization environment. So leases expiring becomes an opportunity to avoid cost. Of course, the expiring lease can be pushed into a power by the hour agreement. That can mitigate risk, but the lessor may be reticent to assume risk. Albeit I will make one important point. The lessor may be faced with Hobson's choice, and Hobson's choice, as we know, is no choice. Take the aircraft back and try to remarket today, or leave it with the airline on PBH and perhaps recognise and create some revenue, and perhaps also avoid carrying maintenance and insurance costs. So I think those are some key decision drivers for operate versus furlough. But for the aircraft that's on furlough, what is the outlook? What can the storage location tell us about outlook for furloughed aircraft? I showed you that fleet of 1,900 or so aircraft that was in store at the start of the year. And at the start of the year, those aircraft were stored in about 300 locations, but a pretty big tail of locations stored. So in actual fact, 50% of the aircraft, this grey line here, this is cumulative storage location versus number of aircraft in store, were stored in about 30 locations. Typical locations where one would expect to see an aircraft stored if it's in long term or going through maintenance between leases. But actually today's fleet is stored in way more diverse locations, 500 different locations, of which more than 300 have less than 10 aircraft stored. Those are locations which would typically be airline operational bases. Those are locations where the aircraft happened to be when the airline decided it didn't want to operate it any further, and it's put it into some short-term care and maintenance. We're seeing aircraft cycle around between locations. When I talk about part-time, I'll explain how we're seeing that. But the reality is that aircraft are stored in very many different locations today than they were at the start of the year. The locations can tell us some things. So actually I've highlighted on here the top 20 storage locations. It includes only 9, those I have highlighted in yellow. Alice Springs Airport, the first teardown location outside of North America, if you followed the trivia questions earlier. The top 20 storage locations include only 9 which were classified as conducive to long-term storage in atmospheric and or meteorological terms. Almost 1,000 aircraft have been positioned to those locations or entered store at those locations since the start of the year. So Roswell, 4 times the number of aircraft stored there today as there were at the start of the year. Marana, again, nearly 4.5 times. Victorville, significantly higher again. Phoenix, etc., and some new ones. Teruel in Spain, nearly 100 aircraft. Ciudad Real Central, an airport built but never used in Spain, with nearly 75 aircraft. And Alice Springs for Asian airlines. But some really key ones that I would talk about that aren't typically conducive storage locations. Jakarta, 120 aircraft stored today. Singapore Changi, 110 aircraft stored. Kuala Lumpur, Hong Kong, etc. And here's why they're not conducive. So this is a slide actually which we used a while ago, provided to us by a partner called Mitiga. They're MACE, they're meteorological and aerosol contaminants exposure index, which shows effectively the weather conditions and the aerosol particulate conditions which are conducive to, or which are not conducive to storing aircraft, because the higher effectively the humidity or weather conditions, the higher the aerosol particulates. Singapore, the higher risk for corrosion for an aircraft. We have corrosion risk, extreme temperatures, high aerosols, and then we have, unsurprisingly, at Marana, Victorville, a good year. Airports which are very conducive, which have very low humidity and very low particulates. These are locations where aircraft have been moved to for long-term storage. I would argue that those aircraft that are in those high-risk locations possibly will have greater opportunity for return to service than those aircraft that have been positioned to places like Alice Springs and Marana. So that's where we are today. What can we learn from the fate of furloughed aircraft in the last downturn? So a really simple analysis that looked at the fleet of around 1,600 aircraft in store at the end of 2008, the start of the last downturn. What happened to them? So actually, if one moves forward to 2009, you can see that there were around 850 aircraft still in store. So more than half still in store. Actually, though, a significant number returned to service, 250, 300 aircraft returned to service. A few returned, changed role, P2F change, and a few withdrawn from service. As we move through, we can see that 30% of the fleet that was in store in 2008 never got back into service as a passenger aircraft. It was permanently withdrawn from use. It was retired. 60% within 5 years were retired. 30% got back, sorry. A relatively small number were converted to freighter. I myself have said in presentations in the recent past that the 737-800 will be saved by P2F conversion. But actually a relatively small number of aircraft historically have been P2F converted. So can that market eat up the surplus I'm going to talk about later? My final bullet point here, I think it must be different this time around because the scale of dislocation is so much greater. I'll come to talk about recovery scenarios later, and we can hypothesize about when the recovery scenarios will occur because none of us really truly know when demand will return to the kind of volumes we've seen in 2019. But we have to have faith that it can do, because otherwise there's a very bleak future for a large number of aircraft. Continuing my employment metaphor, new hires are well down on prior years. That's the positive. The OEMs who provide the new hires have ceased putting aircraft into that market in the same volume as last year. If we were up as we were in 2018, the last stable year of single aisle production, we would see that we would be heading for something like 1,200 new single aisle delivery, new hires this year effectively, and we would have had something like 900 already through the end of October, whereas in reality so far we have around 300. So the positivity is that new hires are well down on where they've been previously, and we'll expect that to remain there for some time. The final point, I think, in my furlough section, aircraft on furlough with lessors need to find a new job. The number of aircraft on furlough with lessors is increasing fundamentally. This is tracking effectively the number of idle aircraft. This is aircraft single aisle or twin aisle, stored with lessors with no future fate identified. And I've been tracking this just weekly since early July. I can't go back and generate it retrospectively because we change our data retrospectively. So I had to just do it weekly, and every Friday I run this data. And it's gone up from 200 to nearly 300 single aisles in just those 3 months, 50% increase in single aisle availability. Aircraft that need to find new jobs. New jobs are few and far between, as sadly as many of us understand in this environment, and they don't pay very well. So this is going to become a major issue as this availability, these furlough with lessors increases. So to summarize the furlough section, a large number of aircraft were furloughed very quickly with little thought to when or how the aircraft would return to revenue operation. In April, airlines were pretty much like rabbits in the headlight. They were stuck, they didn't know what to do, they just parked aircraft wherever they were. They didn't even think about short-term versus long-term storage considerations particularly, but now they're coming more to mind as airlines realize the potentially longer-term nature of the impact of the pandemic. And they're starting to move aircraft around and decide upon short-term versus long-term care. The outlook does remain for a large number of aircraft to remain furloughed at the end of this year, 6,500, potentially more. The longer-term outlook is dependent upon recovery scenario. We'll talk about that more later. New hires really don't help the furlough position. It's up to 600 this year, maybe 1,150 next year with MAX returning, including 430 MAX. This increases stress elsewhere, and effectively for each new hire, we probably expect to see, certainly next year, another furlough. So, part-time. What about part-time? Just a reminder of those aircraft removed from furlough, put back into store service, re-employed if you like, expressed in a slightly different way. This data looks at our utilization data, our flight tracking data, and essentially looks at the number of unique aircraft that have been tracked flying at least one flight each day this year. So at the start of the year, there were 14,000 aircraft flying, single aisle aircraft flying every day. Today, it's just under 10,000. At the trough of the pandemic, it was under 4,000. There's a rolling 7-day average line on here, by the way, which removes the daily seasonality. But twin aisle aircraft, 4,000 down to 2,000. So today, around 70% of the single aisle fleet is back flying on a daily basis, around 50% of the twin aisle fleet. But what are they doing? Are those aircraft working full-time? No, they're not. They're currently working part-time. Aircraft in service are currently delivering around 75% of their typical working day. This is the same data, the number of aircraft tracked on a daily basis, but it also takes into account the number of hours those aircraft have flown on a daily basis, divides hours by aircraft to get the average daily utilization flown. And again, at the start of the year, which of course was a low season, so we'd have been a bit below where we would have been in the middle of last summer. We had around 12 hours a day being flown for twin aisle aircraft. Sorry, we had around 9 hours a day for single aisle, and that's about a quarter down, 25% down for each aircraft. So as I mentioned earlier, single aisles flying around 7 hours a day, twin aisles flying around 10. The part-time hours for single aisle aircraft, they vary by region. So I've simply taken the region of domicile, US, Europe, China, Asia excluding China, and Latin America. And as you can see, for single aisle aircraft, this is indexed to the start of the year. So single aisle aircraft flying around 90% of what they were flying hourly wise at the start of the year. China, with the domestic market largely recovered, has recovered pretty well to where it was at the start of the year. Of course, in the summer, it would have been well above. It should have been well above the 1 at the start of the year. But at least we're almost back there in China. In Europe, we got back there in the summer, frankly. We got back to a much higher number, something like 90% of our utility at the start of the year. But the part-time has come back off. As the winters come, we're starting to see utilization on a unit basis decline significantly. US has been pretty stable. There's a few bank holidays in, public holidays in here, but a slight decline in that trend now. Latin America, the slowest to recover actually, but coming back now and on a positive trend, and Asia, excluding China, very slow and lagging. Just to look at that in a different way, I decided to look at a particular airline as an example of a case study, and I chose Ryanair, and I chose the Ryanair group. So the Ryanair group, effectively, I'm fusing our two data sets here: the fleet in service, the yellow line, and the aircraft tracked from our fleet data, sorry, and the aircraft tracked, the blue and red lines, from our flight status data. And a couple of really important points to make first of all. At the start of the year, Ryanair was showing close to 450, but it's 440 737-800s in service across the Ryanair group. This covers Ryanair, Ryanair UK, Malta Air, and Buzz. But the number of aircraft tracked, because it was the winter, was lower than that. We know that Ryanair park aircraft in the winter, but we know that Ryanair don't put aircraft into store. They use aircraft days on, days off. So consequently, we were seeing something like 375 aircraft tracked on a daily basis. As we hit the pandemic, the number of aircraft in service, we're on our 7-day rule here, declines fundamentally. The number of aircraft tracked declines here. The number of aircraft flying schedules gets down to less than 10% of the overall fleet, just a few aircraft. The number of aircraft flying non-scheduled, and this is cumulative, so this adds the blue line and then the red line, was about 50, about 40 non-scheduled, 10 scheduled, about 50 aircraft flying a day. But Ryanair didn't really store any aircraft for any particular length of time. They just flew 50 aircraft each day, and they flew an aircraft roughly once every 9 days to keep it from having to go into even short-term store. Frankly, the recovery in service here, our 30-day inactivity period, means that every aircraft that have flown in this period here is shown as in service. But this is the important one. Ryanair were effectively flying their aircraft every 9 days, one aircraft every 9 days, to keep it from having to go into store. And here's how we can look at the average flight times to work out the part-time here. Again, the red line scheduled, so there were clearly some routes in here that had sector lengths of around an hour and 20 minutes, but the blue line quite volatile. And I've done a 7-day average through that, by the way, but this is a 7-day average of these daily numbers. Shows that they were flying aircraft typically between half an hour and 40 minutes. Actually, I'm sad enough that when I work from home, I keep Flight Radar on my desktop computer, and I live quite close to Stansted Airport, and I watch their flights, their fleet doing circuits at Stansted Airport as they flew these half an hour. Why? If one thinks about a 737-800, if one looks at Form 41, you're typically seeing something like $4,000 per hour flight cost. So a 30-minute flight is costing about $2,000 an hour. But if you put an aircraft into short-term storage, I don't have exact numbers, but someone related to me recently that it could be costing you between $10,000 and $15,000 a month, probably putting in about 10 man-hours a day to maintain that aircraft in short-term storage, or maybe even having to go into long-term storage after 30 days. So clearly for Ryanair, it's been cheaper to fly these aircraft days on, days off, to keep them warm than it is to store the aircraft. One final point. So I also used the same data to just have a look at the period 1st of June when Ryanair restored their schedule in Europe to the 30th of September, a maximum of 122 days. And I assessed for their 440 aircraft, how many aircraft flew, how many days. That's what this is showing, effectively the number of aircraft on the y-axis versus the number of days those aircraft flew in that 122-day period on the x-axis. Over that period, the aircraft, an average aircraft flew 72 days of a 122-day period. 70 aircraft, that's 16% of the fleet, flew on less than half of the days in that period. So what, you might say. But actually, for the same period in 2019, the average number of days flown by their fleet, the same number of aircraft, was 121. In that summer period, Ryanair flew every aircraft every day, and 2/3 of the fleet actually did fly every single day. So it's really clear that Ryanair, as an example, are using their aircraft less intensively. They're keeping them warm by flying them occasionally. They're mixing the fleet to try and manage their utilization and manage their maintenance status, etc. So it's very clear that right now, with a lot of aircraft on furlough, a lot of aircraft part-time, aircraft which are in service are flying around 25% lower average daily utilization. The lower utilization means maintenance utilities being consumed less slowly, aside from calendar items. Less reserves being collected from lessors, less maintenance demand for MRO service providers. Some airlines are keeping their aircraft warm, flying infrequent non-revenue services flights to avoid having to place into short-term or potentially long-term preservation. And airlines are flying aircraft less frequently on a daily basis within their networks to manage and equalize utilization and avoid storage for some aircraft. So that's furlough, that's part-time. What about redundancy or end of life, doomed? The first point is, and I'll make this point, but I'll come back later to explain how we arrived at these numbers, a significant fleet surplus in our recovery scenario renders more than 4,000 aircraft potentially subject to near-term retirement. We simply went through the fleet of single and twin aisle aircraft and looked at build year ranges and said, to arrive at these 2,770 single aisle surplus and 1,270 twin aisle surplus, which aircraft could it be in one of the build years? And you can see for the twin aisles, for example, some relatively young build years, 777s built up to 2004, potentially redundant. A380 is, of course, a special case, but A340 is a special case. But 737 NGs, all 737 NGs, 800 NGs built before 2002, potentially surplus. A320, first generation, if you like, and early second generation. These are potentially surplus aircraft. But I want to make one point, because I've been there actually. Redundancy can drive career change. Redundancy doesn't necessarily mean the end of your working life. A simple career change, and for aircraft that can be a conversion from passenger to freight, can consume numbers of aircraft. An average of 70 aircraft have seen such a career change annually in the past 10 years, around 50 narrow body, 20 wide body. There's my comment about 737-800s previously. Our fleet forecast predicts, and this is a fleet forecast concluded in July last year. We're currently trying to conclude our new fleet forecast. Boy, is it difficult to forecast right now, as the team would say. But our Cirium fleet forecast for the freight market is pretty robust, actually. It won't change too much from last year. It predicts around 300 narrow body and around 160 wide body P2F conversions through 2025. So numbers that are slightly higher than the historical conversions we've seen. And that's probably without we consider the change we've seen to the way that people are transacting and buying consumer goods today. More e-commerce equals more potential for P2F conversions. But it's not a fundamentally high number. If I talk about 4,000 surplus aircraft, over the next 4 or 5 years, this market could perhaps consume 400 aircraft, perhaps 10%. Retirements. I made the point earlier, we define retirements as permanent removal from service. Retirements as recorded in our database have limited correlation to demand cycles. That is because aircraft are removed from service and often held in store prior to retirement, removal from service, prior to dismantlement and selling for parts, etc., or even scrap. I think we're going to see more of the latter. Even despite the fact that MAX had its problems last year and there was a surfeit of supply in the 737 market, 2019 retirements saw 60 737 NGs at average 19 years. That's because there was still significant demand for parts and engines to support aircraft in service. A small number, these blue bars at the bottom here are a small number of sub 15-year-old aircraft which have been parted out, removed from service. If I look at retirements in a different way, if I correct retirements to the final date of removal from service, i.e. I count the retirement date as the point at which the aircraft first entered store before it went to part out or retirement permanently, then the number's different. It does correlate with demand cycles. So one might expect us to see, and of course we won't know it's been removed from service permanently until it's finally retired. We then put it into the 2018 or 19 or 2020 bar. The numbers here go up. Interestingly, in the last cycle, we saw a big peak of retirements in 2008 as aircraft were removed from service after the global financial crisis in 2009. Then in 10 and 11, as fuel prices went low, we saw more aircraft return to service, and in 12 and 13 we saw more retired. If I go back to my definition of the final retirement and have the same chart I had 2 charts ago, and look at the ownership of those aircraft as they have retired from service finally, operating lessors have typically retired aircraft at an earlier age than other managers, owners. A couple of points. Operating lessors rarely retired aircraft before this cycle. They typically would have been getting out of the aircraft before end of life, but second market, midlife and older, operating leasing management has become an important strategy for many and an important value creator for many. So we see many more aircraft reaching end of life with operating lessors. But when a lessor removes the aircraft from service finally, it makes the part out decision much more quickly. It tends not to hold the aircraft for a period. So those aircraft effectively are being retired at an earlier age. The average age, which is the line here, of course, is still above 20 years. The average economic life is still above 20 years, but it isn't the 25 years that many people hypothesize. So we have a significant number of aircraft on furlough. We have a significantly lower demand. Shouldn't we expect to see more retirements this year, more aircraft which have simply reached the end of their life? The reality is so far we don't, but there are 2 points I'll make about this chart. So this is aircraft that have been permanently retired this year on a cumulative basis, the line, and on a monthly basis, the single and twin R bars. And you can see that there are around 100 fewer aircraft retired this year to October, and we're nearly at the end of October, than there were last year at the same point. But there is a data lag here. Our data analysts have a very challenging job to try and decide when an aircraft has been permanently parted out. Does engine removal mean part out? Of course not. Engine removal could be going to shop. Engine removal could just be stored somewhere separately in a different environment. So we will see this data start to increase. We're also seeing, for example, the September bump up is Delta just parting out its MD-90s, probably for scrap, limited utility in there. So we've seen fewer aircraft retired right now. I think this is because people are just holding and waiting to see if a market for used serviceable material recovers next year, and then we might start to see more and more retirements as people recognize their aircraft is genuinely surplus. One final point. So we have a model which estimates part out valuation. It's the only value slide I have, although I come from an appraiser, it's the only value slide I have. Part out values are in decline. This is simply the part out value for a 737-800 or an A320 with CFM engines indexed to the same part out value in 2015. And you can see that part out values remain broadly stable through 2018, but as demand for aircraft and engines for part out and then lease increased in 2019, part out values rose fundamentally. They're starting to decline. Whilst that market is in stasis, we haven't yet observed necessarily a decline in the values. I expect we will see a decline in those values as more and more surplus builds up, but for now we haven't seen that. So to summarize on the end of life or redundancy, there are potentially as many as 4,000 surplus aircraft. I'll explain why that is in the final few slides I have coming up. Redundancy can lead to a career change, but less than 10% of those aircraft that are redundant effectively will find new careers in the cargo market. Of course, as one ages, redundancy does tend to make career change more difficult. So the majority of those surplus aircraft are likely to be doomed. Some are headed for part out, where values are heading down but not yet in terminal decline. But many of the older types I mentioned, we had 717 on the surplus chart, we had MD-90s, MD-80s. Many of those have come through the stage of their life where they have utility potentially for part out. Their utility for part out is much lower. 737 Classics, the same thing. Fewer parts that can be harvested for value. So many will actually be to scrap. If they go to scrap, they'll probably sit for a long time before they end up being scrapped effectively. So there's a clear expectation that retirements will increase fundamentally on an annual basis, but also the furlough or stilled fleet will stay high for a period of time. So the final point, recovery scenarios and outlook. What does all of this mean for the future? So when the pandemic began, it became a global feature in March. My colleagues in Ascend by Cirium and myself worked together to put together some global recovery scenarios. We modeled 3 recovery scenarios. We naturally called them Scenario 1, Scenario 2, and Scenario 3 deliberately. We didn't want to imply we had any confidence in any of them or any preference for any of them as a base case, so we just gave them a number. And you can see that a couple of them had a recovery in 2021. Frankly, as we are sitting here today in late October, I might describe those as hopelessly optimistic. So we're just going to discard those scenarios. We have discarded those scenarios. Scenario 3, frankly, is tracking pretty well. If we look at all of the drivers, I'm not going to read out the drivers, but you can read the deck afterwards. We talk about the drivers. The drivers are pretty close, actually. Second lockdown, second phase in lockdowns, recession continuing, etc., etc. So in addition to scenario 3, we added scenario 4 and scenario 5. Scenario 4, very similar to scenario 3 in the context of demand through this winter, a stagnation over the coming winter, but recovery much slower. Frankly, when airlines get to 2021, first quarter 2021, they'll be examining booking patterns. We'll know whether scenario 4 is pragmatic or pessimistic or optimistic, but right now it feels kind of pragmatic. And then scenario 5 is a slightly accelerated scenario 3, effectively driven with more vaccinations. We have a whole bunch of metrics that go with these scenarios. We have traffic and capacity metrics based upon demand metrics, based upon productivity metrics, based upon load factor metrics, and we turn them all into fleets. And this effectively is the fleet that we modeled out for scenario 3 back in April. And a really important point to make, and we've already covered a lot of this in the context of part-time working. The fleet in service today is significantly above that which we projected in scenario 3, our initially most pessimistic scenario. That indicates a structural inefficiency in the current system. That indicates that airlines are flying aircraft around 25% lower utilization than they were at the start of the year, and probably even lower than they were midsummer last year. Therefore, the fleet being used is bigger than it needs to be. The fleet being used bigger than it needs to be means that the cost of the fleet, the ASKs generated, the seats generated by the aircraft, is also higher than it needs to be. That is an inefficiency, a structural inefficiency, which the industry cannot live with in the long term. So it will have to be corrected at some point. So we've remodeled that into scenario 4. So the blue line here is the monthly fleets, and then the quarterly fleets through 21 and 22 and 23 for scenario 3. The red line is the scenario 4. And you can see we've matched scenario 4 to the fleet we had through September when this was remodeled, and then we've kept it pretty much static through the winter and actually through the middle of next year. And it does project a significant fleet surplus actually through the end of 2022 and into 2023. What does that mean in fleet terms? Well, scenario 4 implies those 4,000 surplus aircraft broadly. I rounded the number, but around 980 retirements, and here I'm using retirements to mean removals from service annually through 2023. It could be higher if productivity improves faster than projected, but it could be lower if airlines retain that structural inefficiency. Of course, there are delivery assumptions within here as well. So we're assuming something like 2,650 deliveries over the 4-year period here of single aisle aircraft. We're assuming a lower number of twin aisle deliveries. But the conclusion, and I've run through pretty quickly, and also I've come to the end of this a bit quicker than I expected to, but that's great because it leaves time for Nielsen and I to have a conversation, hopefully, and some questions from you. The new recovery scenarios that we have in place project global demand recovery to 2019 levels in the 2022 to 2025 timeframe. Very uncertain right now. Current data tracks towards the more pessimistic scenarios. It's pretty hard, actually, frankly, today to be optimistic, and I've made this point several times. We talk about it a lot in our team. As we sit here staring down the barrel of a long, dark northern winter, stuck working from home, rather than going to the office every day or even traveling, as we love to events where I could speak to you in person rather than virtually, it feels hard to be optimistic. Of course, we have to have faith in the power of demand, the power of the human to wish to travel, the power of the vaccine to make us feel safer, etc., etc. But it does feel like it's going to take a long while to recover further than we thought. The fleet in service is presently above our most likely capacity scenario as a consequence of utilization reductions over the start of the year. Those are structural inefficiencies which the industry cannot continue to carry forever, so that must correct at some point. That's what leads us to our surplus. The pace of return to service of stored aircraft is slowing. we could still see as much as 1/3 of the fleet in store at year end and beyond. We must be prepared for that. We mustn't be frightened by that metric. We must think about how we can return aircraft into new jobs if they're lease aircraft. We have to understand the consequences of that. Retirements and part out volumes are significantly down over last year to date, but there is a lag there. And actually, I didn't mention this, but our data has around 300 further aircraft scheduled for part out this year. A very busy final quarter, but those are dates that we estimate they could slip into next year, and they could of course be scraps rather than part outs if they're older aircraft. There will be a significant surplus of aircraft for 2022 at least, with the fleet at year end still potentially below 2019 levels even in 2022. And overall summary and conclusions, of course, this is really Captain Obvious stuff. COVID-19 is creating a stress scenario beyond anything we could ever have imagined in the industry. A very esteemed colleague of mine gave me the word imagined rather than unprecedented. When we spoke about the cycle at conferences this time last year, we already cautioned about a slowdown in growth in 2020. We thought that traffic growth would be lower this year than it were last year, and indeed 2019 were lower than it were in 2018. But we never could have imagined that we would see traffic declining by 60%, capacity declining by 50%. This is simply beyond the imaginable. The demand outlook for 2020 and 2021 is very unclear as second waves dent passenger confidence and cause travel restrictions to remain in place. I didn't talk too much in my recovery scenarios about domestic versus international, which is a synonym for single aisle versus twin aisle. But it's very clear that restrictions in international markets will remain in place long beyond restrictions in domestic markets. So the single aisle market will recover first, and the Chinese single aisle market is almost back to where it were at the start of the year. The realistic recovery scenario suggests a significant surplus until 2022 at least. Operating lessors are going to see an evolving surplus of single aisle aircraft, which they have to re-employ. As we know, new jobs are few and far between, and they're not paying particularly well right now, if indeed they're paying a fixed sum even. So that's going to have a significant impact on current market values and lease rates for some time to come. I didn't talk about values and lease rate changes. We have made many adjustments at Ascend by Cirium since the start of April, well, since the start of May, when we really started to take action following our research in April. We've captured more than 1,500 data points this year, more than 1,000 or close to 1,000 since the start of the pandemic in April, which allows us to make evidence-based adjustments. We think, no more to come. So that concludes my prepared comments. I'm grateful to you all for sticking with us and listening. I will now stop sharing my screen, at which point Niels and I will have a conversation and hopefully answer some questions. Thank you very much for listening. Niels.
Thanks very much, Rob, for that. We have tons of questions. And a lot of people asked if your slides will be available, and they will be available on ISTAT.org's website in a few days, as will the recorded sessions. If you want to hear it again or recommend to a friend or a colleague, please do so. Now, Michael Dolsing has asked, you notice that behind you, Rob, you have an A380. Actually, it looks like it's flying into the wall. Where are they going to go? What's going to happen to all these airplanes?
Wow. So the A380 is there, Niels, because when you read through my CV, you talked about the Department of Trade and Industry. I spent 2 years of my life in the late 1990s analysing the business case for this aeroplane and recommending a very large investment from the UK government into the A380. Boy, I'm glad I left before the WTO got involved in that. Where are they going to go? I mean, the clear point about the pandemic is that, and I talked about it earlier when I spoke about small aircraft having lowest trip cost. So this aeroplane was designed to have the lowest unit cost. Of course, it's been replaced to some extent already in that paradigm by the 777-300ER, which challenges its seat mile cost, but has a lower trip cost. And thus, that's what effectively meant that only a few airlines with some very big, dense routes could operate an aircraft like that. Where are they going to go? Well, the airlines have made some clear statements already. Many airlines, Air France, Lufthansa, British Airways even, are voting with their feet on parking aircraft. And frankly, it's a rather sad comment for me to have to make, but it feels like the economic life of the A380 is threatened by the pandemic, and we may see many early part outs. I'll make one final point, actually. One airline has been positive about the A380 still, that's Emirates. Emirates has a model which effectively consolidates long-haul traffic through a single hub, as we know, and distributes traffic from North America and Europe into Asia and Africa. As passengers moving forward, how incentivized will we be to think about traveling through a hub where the potential for transmission of this virus is multiplied by going through more than one airport either end, compared to the point-to-point model, which of course Boeing espoused so effectively in the 1990s, which has proven to be true. So price has enabled their model to build, but I think that model could be threatened. So A380, frankly, for me, sadly, and in fact, in context of our values, sadly, seems to be an aircraft that is coming close to the end of its economic life way earlier than expected.
Well, in my hometown, at the airport there, Stockholm, there is a 747 that is working as a youth hostel. Maybe there, we could have a lot of youth hostels around the world with A380s, which would be much more roomy and comfortable than the 747.
You know that Singapore Airlines turned one into a restaurant recently and charged over $400 to have a meal in the business class seats of airline food. I think I'd rather spend my $450 in a top-end London restaurant.
Okay. Rob, now, what do you understand about the return of service of the MAX? Is that happening before the end of this year?
Yeah, so we have no special insight, but of course we talk to a lot of people. So it does seem to me that the signs seem to be that the MAX is close to return to service, with both FAA and EASA likely to grant the return to service paperwork and complete that next month. So I'm assuming that it returns to service in November. If you look at airlines, if you look at US airlines, so Southwest have the aircraft scheduled in their schedule from it was mid-December. It's now gone back to the 6th of January. American have been very vocal. They have the aircraft scheduled from the 29th of December, flying a single daily Miami to LaGuardia rotation. They've talked about potentially flying experience flights beforehand. They're talking about offering passengers the chance to tour the aircraft on the ground beforehand. They'll probably fly low utilization employee flights, etc., to simply debug aircraft that's been parked for a long time, which is, as we know, the longer you park an aircraft, whether it's a MAX or any other aircraft, the more likely you're going to find slight snags. So I think, Niels, we work on the hypothesis that it returns to service late next month. We have a hypothesis that Boeing will deliver a small number of aircraft from the production line, built but not delivered aircraft. They have 450 in their inventory around. We expect them to deliver maybe up to 10 aircraft in December, possibly to FAA jurisdictions, American or Southwest. We then expect a significant number of deliveries next year. I think I had 300, I can't remember the exact number, but 390, 400 or so next year. We think that in the context of new hires caused furloughs elsewhere, that means that 737-800 surplus increases as a consequence. So, in the context of supply and demand and the general macro supply and demand dynamic, return to service of MAX is not good news right now, albeit for, of course, Boeing, it is good news.
So just to be clear, on your storage data, were the grounded and built but undelivered MAXes included in that data? No.
So this is a really interesting definitional point. So when is an aircraft born? And if you remember back to the old days of Ascend used to classify an aircraft first flight as its birth date. But increasingly, as we know, because the handover paperwork involves effectively fixing a date of manufacture and a date of manufacture data plate quite to the aircraft, that's when the aircraft is delivered. So those 450 aircraft have not yet been delivered. So if you like, in our vernacular, they've not yet been born. So of course, when Boeing do return the MAX to service, those aircraft need to be delivered. And actually, we've been doing a quite interesting piece of analysis to try and work out how many of those aircraft, which all have been built with customers in mind and painted with customers in mind, finished with customers in mind, largely, how many of those aircraft could now be I won't call them whitetails, but requiring a reallocation from customer A to customer B. There are some very clear ones, but we did an analysis. So in fact, what we did was our team, 5 of us, got together and did the analysis individually, and then looked at the average of our outcome, and they were very similar. We think there could be as many as 200 of those aircraft that need to be reallocated from their existing customer to a new customer, and that's going to cause a delay in the delivery of those 450. So they'll probably, we think they'll clear by second quarter of 2022, something like that.
But the ones that were born and delivered before the grounding and are now grounded, are they included in the storage?
Yes, they are.
Okay.
Yes, they are. So 383 of those aircraft are included.
Yeah. Okay. Now, do you think that there could be an issue of part out facility capacity to kind of break up a lot of airplanes?
Well, yes and no. So if one looks back to last year and looks at the number of aircraft that were parted out last year, so my hypothesis that there were over 100 more parted out by this time last year than there have been this year, then that suggests to me the capacity exists to do 100 more aircraft. It's as simple as that. Yeah, for sure. I mean, at some point, the number of aircraft you can put through these facilities will decline. But actually, Niels, I think the question becomes, which of those 4,000 surplus aircraft have genuine part-out utility versus which have scrap utility because there's no further part-out. So, for example, British Airways 747-400 fleets, all now out of service, all moved to parking locations in the UK, in Kemble and in Cardiff. But actually, one aircraft already moved from Kemble to, I can't remember the location in Surrey, where it's going to be used for filming. It's effectively retired. There's no utility in the asset. It's going to be used as a film prop. A second aircraft being retained in Kemble for the same kind of utility. So those aircraft don't need part out facility because they're just going to sit there and, if I can use a terrible word, rot away before they're finally scrapped at some point in the future. So I think what we'll start to see is part out facilities being the throughput, prioritizing aircraft that have genuine utility. And actually, I didn't talk about this, but we should do a little bit. As I talked about how airlines will want to minimize their maintenance effectively, but you can only do that for so long. At some point, I mean, maintenance on all your aircraft is used up. So you're green timing your fleet effectively to the point where you have to start to put aircraft through shop. And at that point, you still want to minimize your capex because you don't want to be spending on new parts if you can help it, or a full engine shop visit or whatever. So perhaps at that point, the need for parts, which are currently on the shelf and don't have much demand, flips, and it'll probably flip quite quickly. And at that point, the part out traders, who, if I can pay them a compliment, live on their wits. They trade parts on a day-to-day basis. They absolutely know the market way better than we can know the market. They will know what becomes in demand, and they will certainly start to go and buy the assets that are in demand and part out the assets that are in demand. I think the facilities will be waiting for that throughput. So that could occur tomorrow, next month, 18 months, depending upon the recovery scenarios.
Yeah. Okay. Rob, we have a question from Sander. He's a professor at Embry-Riddle. He's wondering about the source exposure to the maintenance condition of aircraft. I mean, is that exposure increasing now as part of the fleet is furloughed?
Yeah, I think it is. So you know, one needs to think about the agreements they have in place. So if I'm a lessor, and I'm staring down the barrel of a lease return, and the airline is going to make the return, and the airline is going to meet its return condition. I can take an aircraft back that has whatever life I've agreed on the engines and the airframe and the gear, etc. Or I can negotiate some kind of cash adjustment. Of course, the airline's not keen to negotiate a cash adjustment because that means spending cash, and the airline may have already done the maintenance. But of course, if I get the aircraft back and it's got a certain maintenance condition, can I then place it? Although, if I can't place it, what could I do? Of course, I have another aircraft in my fleet on lease still, coming to a shop visit. Why don't I take the engine off my returned aircraft and put it on my aircraft that needs a shop visit? And I can effectively manage my maintenance utility from a cash flow perspective, and minimize my own cash outflow or maximize my cash retention. Of course, that only works for so long because at some point in time, everything, again, a bit like my green time, comes due. and where maybe I part out. So, but for now, I think there is an increasing exposure to lessors of maintenance condition, and they'll manage that. Those lessors with big fleets can manage that, and they have opportunity to manage their spend accordingly.
Vahan Callan has asked an interesting question here, and that is, I don't know, in your data on the lessor-owned aircraft that are stored, can you distinguish between those aircraft? How many of those are still on lease with the lessee and managed by the lessee, and how many are returned to the lessor?
Yeah, absolutely. I can't remember the slide number, Niels, but I used a slide that showed the stored fleet by ownership. And there were 3 bars on there. There was a bar that said airlines, there was a bar that said lessor on lease, and a bar that said lessor idle. So by idle, I mean an aircraft. So if I get all definitional on you, we have in our fleets database, we have 3 fields for we have an operator field, we have a manager field, that's the lessor, we have an owner field, that's the SPC that owns the aircraft. So a lessor idle aircraft is an aircraft where the manager is a lessor and the operator is a lessor, i.e. it's off lease. And I went further actually, because I can also identify in our fleets database, and this is not perfect because we don't have a full view of people's skylines, but we can identify from that pool of aircraft that are off lease, aircraft that have a future lease identified, aircraft that have a future part out identified, and aircraft that have a future P2F conversion identified. So the 300 aircraft I talked about as being idle are aircraft that have no future fate. There are probably around 90 more aircraft in our database that have a future fate, either a new lease, a part out, or a P2F scheduled.
Rob, I think that there are a lot of questions that kind of have to do with the elephant in the room, because the scenarios that you're describing here clearly are having or will have a major impact on valuations, base values, value retention, economic life, et cetera, et cetera. And I mean, this session was really about the storage pattern, right? But as an appraiser, how do you go about now to look at current market values when there are so few naked aircraft transactions around?
Yeah, so I think I did use the words, and I need to just I won't load another slide to check my numbers, but how do we calibrate current market value? Whilst there are relatively few naked transactions, Neil, so I guess I'd make the point that even last year there are relatively few naked transactions. You know, the ISTAT definition, current market value, single aircraft, willing buyer, willing seller, known coverage, reasonable remarketing time, is a definition that the appraisers at ISTAT recognise is rarely met these days. And when we capture data, whether it be a sale leaseback or a sale with lease attached, or a portfolio sale or a new aircraft delivery or whatever, we have to normalise that data back to our current market value definition. Frankly, it's harder for lease rates today because we're getting a lot of PBH type data. We're hearing of PBH, and that's really even harder to normalise. But we do it. So we do it. If I can, actually, one of my colleagues, esteemed, he's a senior ISTAT appraiser. When we presented this together, he ran a video which showed a footplate of a steam engine. He actually is an engineer on a steam engine at his weekends. He loves doing that, and he was firing the engine, which is quite an art because you have to get the coal in the right place and heat the box to the right area. It's not a science, it's an art. And frankly, the definition of current market value, current market lease rates, or the calibration back to that is quite a dark art. Base values is a science. Base values are logical. They have an algorithm, etc. But markets are dark art. Now we are capturing data. I mean, I said we've captured around 1,500 data points in 2020 around sale price, opinion, leases, etc. Sale leasebacks, all that. We've captured around, I couldn't remember the numbers, but it's around 800 to 900 have been captured since the start of April. In fact, we've got a webinar tomorrow. One of my colleagues is going to report these numbers in full detail. So we are capturing the data, and we are making changes. And if I can, I haven't got the slide again, but we've changed a significant number. I think from memory, I asked Mike Lapson to give me this number last week, and Mike gave it to me. From memory, of the fleet of around 28,000 commercial aircraft, jets and turboprops, including regional jets and turboprops, we have made market value or market lease rate changes on nearly 26,000 aircraft. We've changed values on most aircraft. Of course, most have come down, and they've come down by, between, it depends on the aircraft type. So on a fleet weighted average basis, we've probably reduced A320 CO values by around 15%, but on a vintage basis, but by between 12 and 33%, because the older aircraft have seen more value decline, the part out value point I presented. So we've made those changes, and we're confident that we have value to calibrate them. If you like, in market value versus base value terms, because that's a really good fleet metric to indicate where we are in supply and demand terms, where in 2008 to 10, it took 2 years to go from peak to trough. Market values went from being about 80% above base to being about 90% below base on a fleet weighted basis. Today, we're at the bottom already, only 6 months into this pandemic, having only started to make really negative changes in May. So it feels like, I've used this metaphor, it feels like market values and market lease rates declined on an escalator last time, a nice orderly manner. The capacity went down by about 3% in 2 years. Demand was okay, but it wasn't. We went down an escalator. This time, values and lease rates have changed. They're in the elevator. The cable's broken. We're hurtling to the bottom. There's a safety cable. The safety cable is part out. So the safety cable stops values going into terminal decline. But we're going to get to the bottom much more quickly. The thing we're angsting about in our team right now is last time's bottom this time's bottom, or is there further to go? And it might be. I don't know that. This is a speculative comment, and I must make the point, I'm not an ISTAT appraiser, although I work for an appraiser. I'm not an ISTAT appraiser. It feels like there are more changes to come. If my 4,000 surplus hypothesis is correct, it feels like there's going to be a surplus of demand, a surplus of supply of demand for some time to come. Each aircraft type won't be affected equally. That thing's, had it. Bad way of putting it, but that thing's in terminal decline. The 717's in trouble. There are other types in trouble. 4-engine jets are in trouble, basically. But we are able to make those changes, Niels, with some confidence. And frankly, even though we're in a 99th percentile scenario right now, our kind of 95th percentile downside envelopes look pretty robust even now. So, yeah.
On a related note, I mean, with the permanent retirements and the cutback in OEM production rates, at some point the capacity balance against the traffic demand will be restored. So is there any reason for people who are looking at investments now to alter their view on the residual values in, say, 8 to 10 years from now?
Yeah, so I guess I could paraphrase that question as have base values fundamentally adjusted, and at this present time we don't see any reason to fundamentally adjust base values of most aircraft. And in fact, we have a hypothesis. So if I think about, I talked about the production rate or deliveries this year, and of course when MAX comes back next year, we'll probably see something like 1,100 new OEM deliveries. But our forecasts, we're concluding them, but our projection we've been using in public has that production rate staying pretty stable for 3-4 years. But if many of those aircraft that I've said are surplus are in store today stay in furlough, how long can they stay in furlough before they can't be returned to service any longer? At which point there could be upside for newer aircraft. It all depends on the recovery scenario, frankly. And what I didn't say was our scenario 4. We've modeled that on a regional basis, so we can tweak it, we can monitor it on a regional basis, we can see how it's proceeding. So I think there is no reason right now for investors to adjust their long-term outlook. We remain confident that demand will return in the longer term, and there's no fundamental reason why that should be permanently impacted yet. But as we proceed through the next 6, 12, 18 months, more becomes evident, the crystal ball clears a bit. So for now, no change in base values. I mean, frankly, base values are typically assessed every year, but fundamental changes occur once a cycle. But the time to make the fundamental change is not in the disrupted point of the cycle. It's when you're at equilibrium again, and you recognize that you have a disequilibrium in market and base. That's when you change base values.
Rob, we have quite a few more questions, but I haven't they've come in very late in the session after the question and answer session started. So I haven't been able to kind of review those, but I will take a look at those after this session and maybe get back to you, and we can then provide the answers to the people who asked the questions.
Please do that, Niels. We're delighted to answer the questions. Yeah.
So thank you so much, Rob, for that. And thank you, everybody, for listening in. And we see you back on the 17th of November with Doug Walker from Seabury for the airline restructuring session. Thank you so much.
Thanks very much, everyone. Goodbye.